Welcome to Real Estate U with Lettiann.
Good afternoon, everyone. Welcome back to Real Estate U with Lettiann. And we are so thankful to have Ben Fraser with us today. He's with Aspen Funds. And if you've not heard of Aspen Funds, they too are a locally owned and operated company. Ben and his father, Bob, started the company. And how long ago was that?
Yeah, so it's actually my father and a partner, and I joined about 2 years ago. They started it in 2012.
Wonderful. So just as the real estate market was coming back up, they maybe saw an opportunity there.
Exactly.
Things were priced right, but yet starting to inch up.
Yeah, exactly.
Okay, so Aspen Funds, what do you do?
Yeah, so we're a real estate investment firm. So we pool together money from investors, and we go and invest that into real estate assets, specifically real estate notes or mortgages, which we can talk more about in a little bit. And we provide passive investment vehicles for investors to earn, great returns backed by real estate and not have to do all the work themselves. And that's, what we do. So
you could have people that have the money, but they don't have the time.
Yes.
But then you have programs, I'm understanding, that people who, I really want to be involved and I really want to be a little bit more hands-on. Is that right?
Yeah. So we have resources for people that want to do it themselves. We love...
Can you tell us what that looks like? Oops, sorry. Sorry.
So, we have a resources guide that we put together. It's a 5-page, free little download, and it just...
Where can someone find that? Because somebody might say, hey, well, let me connect the dots here.
Yeah. So it's on our website, aspenfunds.us.
Aspenfunds.us.
Yep.
Okay.
Yep. And if you... I don't know if it's downloadable there, but if you hit the contact us and... hit a little message, it goes straight to me and just say, hey, I heard about the resources guide. Can I get that? And I'll send it for free. Yeah.
They might send you a message that said, wow, you did really well on Lettiann, Real Estate U with Lettiann. And thank you for the information, because so many times people really want to do something and they don't know who to turn to, or who do we ask these questions? And again, I can connect you with Ben. I'm happy to connect you with Ben if you have my information, but you don't have his. So let's go back to this downloadable or a document that you would be able to send someone. And is this for the DIY person? Or?
Yeah. So I'll take a quick step back. So a lot of people might have heard of real estate notes or note investing, and anyone that's been active in real estate investing, on their own for a while, probably heard of it, but may have not done it themselves. It's kind of a unique niche within real estate. But very simply, it's instead of purchasing a property and you put a tenant in the property and you get the cash flow, above the mortgage payment, or if you paid in cash from that investment, you can also purchase the mortgage. So instead of being the owner of the property, you actually become the lender. And you get monthly mortgage payments from the borrowers, and they pay you to live in the property. And it's a great... So
you're the lender.
We're the lender. Yeah. So we're not a bank. Gotcha. We purchase these from banks. Mm-hmm. We purchase them from other, owner finance properties. I'm sure if you heard of owner financing, instead of a bank lending against a property, an owner that's selling it can also do a private note. And we purchase those, and from an operational standpoint, we don't have any of the maintenance issues that you would have as a real estate rental portfolio owner. You don't have any tenant issues because they're lived in by the owner that wants to live there, and it's pretty scalable as long as they keep paying. And if they don't pay, we have a lien on the property where we can foreclose if we need to, or work out a solution that makes sense. So it's a great kind of unique way to invest in real estate. And we have funds that we do passive investments for those that have a little bit of cash but don't have the time and want to diversify into real estate. We also like to help people that are getting started in the real estate investing journey.
Is this a good place to start with the real estate notes?
Totally, yeah. So that's what I was going to say. Is we have a whole guide that details, here's the podcast you should be listening to, here's the books you should read, here's the conferences you should be attending, here's the blogs that you should be reading, and just to learn about it and just the whole kind of we call the note investing world. It's kind of a niche within a niche, but it's pretty cool. And because there's not a lot of people there, the returns are much more lucrative than you would get in a standard, real estate rental.
And it's just taking the hat off of, I'm not the Sorry, Andy. I'm not the owner. I'm holding the mortgage.
Yeah.
So if I want, do you show me a group of notes and say, which one do you like? Here's the great one
Sure.
with a great tenant. But who owns the property if I say I'd love to buy 1, 2, 3, 4, Jersey Street?
Right.
I simply, like, if we were not a mortgage, but I'm taking over the, as the bank for that property, but I know who the owner is because there's a tenant in there. So there's like
Right.
lots of players and moving parts here.
Well, have you ever got a letter on any homes that you own saying, hey, you have a new lender now? We recently sold your mortgage to.
I don't, because again, supporting local, I have my properties through. They don't sell their loan.
Got it. Yeah.
So,
I'm with you. I like to go with banks that don't, but
Yeah.
a lot of listeners and other people, it's very common for
common.
mortgages to get sold to
Again and again and again and
over
again.
and over and over. And so that's basically, we have an LLC that buys the mortgages, and we send the letters out and say, hey, we're your new lender.
And then, but you will sell it. You will sell.
So we don't generally sell the mortgages to individuals, but we help get people connected to the places where you can buy the mortgages. If you want to get it on a DIY way, where you want to test out the waters of investing in real estate mortgages, we don't generally sell our notes, though sometimes we do. But there's a lot of other places. There's online exchanges and other places you can find notes to buy.
So if you're holding the properties as if you were the bank, although you're not, and someone wants one of them, or you're selling the note though. So I'm a little bit confused.
Yeah, so we don't sell the notes. We buy notes. We put them into our funds, and then an investor invests in the fund, and they have a part ownership of that fund, and then that fund owns hundreds or 1,000 notes.
Pool of houses.
Yeah, and it's a diversified pool that we do all the management of that, and they get the returns from that pool of assets. For a DIY investor, we give them all the resources to here's where you want to. All the things you want to learn to get started, and then here's some great places you can go buy them on your own. And we have most of those relationships because we've been in the industry for a while, so we can connect people to those as well.
And I've just connected the dots, so now it's making sense to me. So besides the real estate notes and sort of the DIY, what other programs or what other services do you offer at Aspen Funds?
Yeah, pretty much that's it. So we've been pretty laser focused, and kind of to your kind of point earlier on. So my father and his partner, they saw this opportunity, coming out of the Great Recession. And my dad's partner, Jim, he was a real estate developer for 30 years. He was actually in California. And that whole market dried up for development of real estate.
Surprising for California, right?
Yeah.
Yeah, really surprising.
Yeah, and it came to a screeching halt. And so he's looking at, okay, where do I go? My whole background's in real estate. And kind of a light bulb went on where, he noticed that, okay, even in the hard times, it's generally the banks that seem to come out a little less unscathed than the average investor. And the reason is because you have those 100 pages of disclosures and all those things that in a note that you sign with a bank that gives them the rights to, pretty much do whatever they want if a default happens. Mm-hmm. So it kind of spawned the interest in note investing. And so he started kind of a beta test. And they, raised money from friends and family in their first fund. And the proof is in the pudding. They realized, wow, this is not just a, one-time unique opportunity. It's really a long-term business model that we can scale and grow and help a lot of people invest in this asset class that has a lot of great benefits that, a lot of people don't know about.
People give you money, they invest in these notes that you're holding, and you have a formula of what that might look like as far as a return for everybody.
Yeah. So a lot of people, I'm sure, have invested in the stock market, through 401ks and other things. That's a pretty kind of well-developed ecosystem. It's people understand what that is, and so. What we do, we operate under what's called the Regulation D exemption of the SEC, and we can offer private investment opportunities. So we're not listed on any public exchanges.
Okay.
We're not necessarily registered with the SEC on those, but we can market these to investors, and a lot of the regulation changes have allowed us to help people diversify outside of just the Wall Street, system. And a lot of people are concerned about that right now with, just the stock markets can continue to go up for 10 years, which has been great. But we are due for a correction, and no one really knows when that's going to happen. We all know it will at some point. And so taking some chips off the table and putting it into an asset class that has a little more stability is a good idea. So we have a lot of investors that's appealing to.
Do you go out and look for properties? Do you have a team that says, okay, let's pick that one up and that one up and that one up and then you put it in your pool? Yeah.
So we have a staff of about 20 people. I'd probably say about 5 of those are all on the acquisition side. So it's finding.
Sorry to interrupt. All Kansas City
No,
area,
so our headquarters is in Kansas City.
Okay.
Then we have a few satellite offices. We've kind of run a virtual company, so we have some in Texas, Colorado, Branson, Maryland. So kind of all spread out. But the headquarters is in Kansas City, and finding the right notes to buy. Any investor knows that you make your money on the buy. So we're very particular about the types of notes that we'll buy. So we have a full team dedicated to finding those and evaluating those. And
that'd be an interesting job.
It's pretty fun. I used to be an underwriter for a bank before I joined here, and you get to see a lot of what's under the hood.
So one who might be investing with you locally could be owning something that's out of state, but it's in that pool.
Yeah. So again, it's really a diversified pool. We have over 1,000 notes in, I think, 45 states.
Okay.
So it's very spread out. There are certain states that we generally don't want to be in, or will have limited exposure in just because of some of the regulations. So when you own the mortgage, you have a little bit more compliance that you need to do because of the regulations, right? With different state laws, sending out the right disclosures and
protocol. All that.
So there's a little more you have to learn. And so because certain states are a little bit friendlier and some are not, we kind of steer away from certain ones. But generally it's a pretty diversified portfolio, and all over.
So Andy's telling me we have about 5 minutes. What, in your opinion, what is your take on the current housing market here in our area, in Kansas and Missouri, in the Kansas City metro area?
Yeah, I'm going to be a buyer probably in a year, so I've definitely
and I gave
been
you my
paying
card.
attention. I got it right here, so go work with Lettiann.
Thank you.
She's awesome. We think there's definitely some strong fundamental drivers of the appreciation in the market. And this is not just in Kansas City, but nationwide. And a lot of it's come down to a lack of inventory. This is probably something you see with your clients all the time. Mm-hmm. There's probably more inventory on the higher end of the market than on the lower end.
Agreed.
And the reason is, after the 08-09 crash happened, a lot of the developers went bankrupt, went out of business. They left the industry. A lot of the labor left the industry. So you have an increase in labor. Land prices have gone up.
Lumber's
gone up. It's come down recently, but it's been a lot higher, for the last 10 years. Mm-hmm. And so what happened is all the developers who need to make a certain amount of profit, it just the numbers don't make sense for the lower end or the entry level point of the market. And so they've all gone to the higher end, and there's just less of them. So I actually have charts that we show in some of our presentations that the actual development of new builds over the last 10 years is significantly underbuilt, massively underbuilt.
Nationally?
Nationally.
Yeah. Okay. Nationally, folks, remember that.
Okay. So Kansas City might be a little bit different of a story. Yeah. We purchased some in the metro, but we obviously purchased nationally, so we're a little focused on that. But a lot of it, we think there's still a lot of support left for the real estate prices. And a lot of it comes down to basic supply and demand. I'd love to hear what your thoughts would be in the local market.
Yeah, and I appreciate you asking me. So we're seeing the prices stabilize because, there was such a great increase. And I think the national average is typically year over year, 2.5%, on average forever, that the increase in the housing market. But then we started to see like 4, then 5, and then 6, and then sometimes 8, because people were paying more because there weren't enough houses for the people in certain price points. So people were saying, look, I don't care, I'll give them $20,000 more because I don't want to lose this house.
Right.
And then the following year, the neighbor will say, well, Susie got, $350,000 last summer. Why are you telling me my house is only worth 3.25? I have the exact same house. We have the exact same, features. And just as a joke in my head, I sometimes say, well, I'm sorry you didn't sell last summer. Because things are stabilizing.
Right.
I think so, even at more at different price points, are far more popular, of course,
sure.
than the other pool. And as far as the luxury market, I think now if one is really wanting to get their dream home, or wow, we'd really love to get our luxury home, even if you're empty nesters, but like this is where we've always wanted to live there.
Yeah.
But it's a little, it's a little bit at a higher price point. I think now's the time that they're going to get and I'm not saying you're going to, rip off somebody to take their
Sure.
home, but because things are stabilizing, and that pool of, let's say, over 500,000, over 750, over $1 million, you can really get $1 million home or $800,000 house at a better price point today than you could in previous years.
Yeah,
that
makes sense.
Yeah. And
it probably makes sense for those that are, like you're saying, looking to upgrade, where they have maybe a home in that lower price range where the market's maybe still a little bit warmer, or the prices are still solid, and then upgrade, and it's a better time to buy. So you kind of get the benefit of both sides.
Yeah, exactly. So in my opinion, there's never been a better time to invest. I don't think we're headed for a housing crisis. I think we might be on the cusp of a recession. And again, this is my opinion. But no indicators are indicating housing crisis. Are you feeling that same way?
100%.
Okay,
Yeah,
good.
I think.
Let's tell everybody again.
Yeah.
There are no indicators nationwide. There are no indicators saying housing crisis.
I think there's indicators of early indicators. We've seen the inverted yield curve. There's some trade issues, but from a real estate standpoint, I'm with you. We don't see a lot of huge risks on the horizon, where we saw a lot of that in 06, 07, where a lot of the banks were underwriting.
Which started with the mortgages.
Yeah, and it really started there, where they're underwriting loans to people that have no income. And what do you expect to happen when you get that loan? They don't start paying, and they packaged them in these big old collateralized debt obligations. Then you lost the chain of title and really what the underlying asset was, and they sold them off. But yeah, we look at the underwriting standards. They have not really changed from post crisis to now. The banks are still pretty tight on what they want to see for to get a loan.
And I'm so glad for that.
Yeah, I think generally the next recession doesn't come from the same place the last one did, because everyone kind of learned the mistakes and have corrected. And so we're with you there. There's a lot of strength in the real estate market. From an economic standpoint, we also think that there's still plenty of running room left. Unemployment is the lowest it's been in over 50 years. GDP is still growing, at a comfortable rate. Inflation's being held in check, and obviously there's some worries. We have the election coming up. We have
that's probably
trade
the big
issues.
factor.
Yeah, so people are concerned, and the market's showing a lot of volatility up and down, but it's not really. There's no correction or massive recession that anyone that we're seeing right now.
Yeah, no, good to hear your thoughts and that they coincide. So Andy's telling me we have just about less than a minute. Thank you so much for being here today.
Yeah, thanks for having me.
I'm curious about that information that the downloadable, and if it's not downloadable, I'm probably going to reach out to you. I'd love to read that.
Yeah.
And again, that is aspenfunds.us.
Yep, Aspen is in the tree, funds.us. And we're working on putting together, you just reminded me as we're talking about it, our economic forecast for the next kind of year plus time frame. We're doing a 4-part series of different things in the economic world that we can provide as a free resource for people as well on the website. So it's not live yet, but It will be downloadable probably in the next few weeks, and just a free resource to help people just know where we're at in
So
the
stay
economy.
tuned.
Yeah.
Stay tuned. Stay in touch with Aspen Funds, again, a locally owned business. Ben, thank you so much.
Yeah.
Look forward to future endeavors with you.
Yes, likewise.
All right.
Thank you.
Thanks.